Hello and welcome back to our weekly market recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Let's get to it. So this past week we saw the market end relatively flat for the week, down around 0.2%, which means year to date we're still down 17.6%, and then from the market highs in February down 19.5%. Rich is going to talk to us about March and April and kind of the differences and overall changes that we saw in the stock market.
Yes, and as everyone is aware, and that what we've discussed, March was one of the worst months that we've had since the Great Depression. It was down approximately 18% for the month. At that time, if you remember, we did tax loss harvesting in most of your accounts, kept the equity allocation the same, and reinvested in equities we thought would do better if there was a market moving up. Fortunately, in April, we had a 15% rise in the Dow, which means that you participated in that growth. And that's one of the reasons why we do this type of market analysis and then, with your permission, change your accounts to benefit. And it has paid off for this month.
Yeah, so I think one of the headlines that we've seen is that April was actually the best month in the stock market that we've seen since 1987. So the best overall month that we've had in over 30 years. And this speaks to exactly why we keep you in the market when we see it go down very drastically. If we were to panic sell at that moment, you wouldn't have been able to enjoy the recovery that we saw in the next month. So overall, having a long-term vision and making a few smart tax shifts here and there, but overall keeping you invested in the market in the same allocation for the long haul. Now, specifically for last week, the two main market movers were the Gilead drug and then Amazon's earnings coming in. So first we're going to talk about the drug, and Rich, what were kind of some of the main things that highlighted last week?
Yes, well, the Gilead drug, and what's so good about it is that it mitigates many of the symptoms of the coronavirus, COVID-19, to the extent that people, instead of being hospitalized for 10 days or longer, are only requiring 5 days of hospitalization. This is huge because basically it doubles the capacity that we have with a single drug. In addition, we were also told that by next week we'll have over 1 million doses of this drug available to use across the country.
So ultimately, it's a very much bringing the timeline of the coronavirus impact down drastically, which had a very positive effect on the market. Now, the negative effect on the market was actually coming from Amazon, and less what their first quarter profits were, which came in actually above what was expected, but it's more their second quarter guidance that really sent the market kind of questioning or more insight, because what they claimed is that they expect to increase a $4 billion profit, so have a $4 billion profit for quarter two, but also that their expenses are going to rise by $4 billion. So ultimately a net there, and their reasoning for that is coronavirus expenses are going to continue to rise to such an extent. And that was something that the market wasn't really expecting to see. And so the last 2 days of the week, you saw a sell-off coming from the understanding of all these companies might actually have a lot more coronavirus expenses to even stay open in the second quarter. So to kind of conclude for the week, we had the upward, positive news of the Gilead drug and the fact that the coronavirus might not affect us for as long as we were expecting, coupled with the negative news of if the coronavirus does continue, there's actually going to be new expenses that the market wasn't initially pricing in. So those were the two main factors that were weighing on the market. Ultimately, like we said at the beginning, it was pretty negative for the week, so they kind of evened each other out. But those were the main two factors. And like always, we do want to end kind of our last 30, 20 seconds focusing on, again, yourself and you and what really matters at this moment for you. We're still here to support you. Your money's here to support you. Please, if there's anything that we can do, reach out to us. Let us know. We love hearing from you, and we love supporting you during these times. So thank you, and I hope that everyone has a great rest of your weekend.